Hello, everybody. This is me, C. Akshay Kengre, live uh, on quick takes on the Union Budget 2021. Uh, Half an hour back, I think our Honorable Finance Minister, she delivered uh, a very growth-specific budget, and I think I would rate this budget 9 on 10 at this point of time. I'm just holding back that one because I've still not seen the fine print on what the taxes needs to bring out. But otherwise, it's a very good budget in this particular scenario. As there's a popular saying, when the going gets tough, the tough gets going. There were two options before the Indian government at this point of time. The first option was to focus on fiscal deficit, to focus on negative growth, and to say, okay, we will cut expenditure and really not look at the growth story, or maybe let's try to get the numbers back on track and accordingly take the decision of doing less expenditure, maybe looking at taxes to grow the revenue. Uh, However, if you see what really has happened is the second option, where it's a very growth specific expenditure oriented budget, uh, where a lot is put back in the economy in terms of growth, in terms of infrastructure, especially the healthcare field. And what's going to happen out of this is there will be a plethora of employment generation. There was, which I think in the COVID period, somewhere India lacked because of the situation that it had to undergo. Uh, there was a sharp V-shaped type of, uh, you can say there was a contraction and then there was a bounce back from a growth perspective. I think in quarter one of financial year 2020-2021, the growth contracted by 23.9%. And now, if you see the overall estimates for financial year 2020-21, I think the GDP is contracted by around 7.7%. And again, in the next year, we are looking at the growth story. So, so I think most of the COVID issues are getting weathered out, and the economy is slowly coming back to track. But this budget, what it does is instead of just giving you certain tablets for having the recovery path, I think there are more vaccines and more of antibiotics given back to the economy so that this recovery is going to be really, really speedy. Now, if you see this budget particularly, there is a lot of clarity on infrastructure. There is a lot of clarity on how the insurance sector would be looked into because that's where the country is looking at, say, growing the insurance sector by increasing the limit of FDI from say 49% to 74%. However, keeping the faith back in the Indian management, where the more control and management will stay back with the Indian promoters or the Indian management. Similarly, there is a lot of clarity which was brought on the privatization. It's a very clear target for financial year 2021-22 for privatize certain specific companies where the government could get a certain amount of revenues. A lot was talked about, say, something like a COVID cess, and there was a scare which was there already in the market, stating that there could be indications of COVID cess on say the very good part of the society, but that something like that has still not come out. I've still not gone through the fine print, but doesn't seem so because an important announcement like that should have been a part of the budget speech. Now, looking at future, India is looking at a growth of around, say, 10 to 11% in coming years, and that is something which was envisaged in the economic survey which was released last Friday. My main intention today is to focus on key direct tax proposals which were laid in the budget. I have still not gone through the fine print, so there could be certain more direct tax proposals which I will cover as and when and we get time to really analyze. But upfront, there were certain direct tax proposals which were placed in the budget house. Let's take them one by one, and I would like to really go maybe in discussion in terms of what changes would come out of these maybe say direct tax proposals on at a bird's eye level. So the Vivad Se Vishwas scheme, the last date has been extended till 20th February 2021, which clearly states the government's intention to away with certain amount of litigations where taxpayers themselves contend that possibly the case may not turn in favor, and thereby looking at a tax payout irrespective and without any penalties and some amount of interest there. So that's a welcome move to defer it by another say 28 days. So even from a government's point of view, they get some time to collect that particular revenue. Very important step. I think this is saying thanks to a very important part of the society, which is super senior citizens. For super senior citizens above 75 years of age, now they do not need to file file the return of income from financial year 2021 onwards. And but the criteria there is that the income should be only from pension or interest on which tax is already deducted. So it's a big relief from a compliance point of view. It's a very welcome step. Now, one more area of trouble which the taxpayers used to really complain about is the reopening procedures. Every time there was an assessment which was closed, there could have been a possibility of reopening that assessment, and that particular time frame was 6 years. So there was a sword which was always hanging on the taxpayer's head, that from till 6 years there is a possibility that the tax authorities can send you a notice, and there could be proceedings being reopened on certain assessments which are already closed. Now this 6 years period has now been reduced to 3 years, which is a very welcome step. I would say in terms of reducing the amount of litigation. Of course, cases where there is tax evasion involved and where the amount is going to be large, which is more than 50 lakh INR. In that cases, through an approval route, there could be reopenings done till say 10 years. But at least that's instead of 6 years and 10 years, now it is 3 years and 10 years. And for the 10-year period, there would be necessarily an approval of principal commissioner of income tax, and there has to be a particular application of mind with reasons for that reopening. Another important step for small taxpayers and to reduce further disputes is to setting up of dispute resolution constitution, like a faceless dispute resolution panel, where a total income up till say 50 lakhs, or where the tax amount is up till say INR 10 lakhs, small taxpayers could apply for such dispute resolution mechanisms rather than going through a conventional way. Big change in terms of how litigation is looked in India from a tribunal point of view. Now, tribunals are typically very tax-specific tax tribunals, and these are there in almost all major cities of India. Tribunals are basically the final fact-finding authorities. And okay, we are getting some questions. Okay, we'll just cover that. Okay, so from a tribunal's point of view, I think it's a big welcome step again, because when the assessment goes faceless, there is huge amount of time savings for the taxpayers as well as for the tribunals, which will lead to a faster dispute resolutions. Okay. Again, it's only possible because a country like India has large infrastructure in terms of electronic infrastructure, which makes all these things possible. So many of the developed countries still they don't have such type of infrastructure where they could look at resolving end-to-end factual tax cases online. We are doing that, and especially the proposal is to do that faceless. So it's a very important step and in the right direction. Let's talk of NRIs. I still need to look at the fine print, but there has been a commitment from the government to reduce any type of hardships on the double taxation caused by certain tax deductions while interpreting the treaty, and to give treaty benefits. Right now, there are stringent conditions to really look into the treaty benefits and to give treaty benefits to NRIs. Tax audits. Yeah, tax audits. I think the limit earlier has been increased from 1 crore to 5 crore, and now from 5 crores to 10 crores. And in such a case, again, it will lead to a lot of ease of business across the industry. Um, Tax audits were one of the compliances where a chartered accountant had to specifically report certain aspects of income taxes after verification of books of accounts. And this will ease off pressure from various small and medium enterprises, and increasing such limits is a welcome step. Another type of audit here is a transfer pricing audit. There was especially no limit for such transfer pricing audit, which we do in Form 3CEB. We need to go back, look at the budget documents to see if there are any limits which are placed on the transfer pricing audit part. And yeah, so I think I'll cover that in maybe a post analysis part of this particular budget. Okay. Uh, Dividend taxes, of course, dividends basically, where if one person is receiving dividends, he was expected to look at such dividends being received and advance tax being paid on that. But of course, there was a practical impossibility of, I mean, evaluating what type of dividends a particular taxpayer would be getting in a particular financial year, because that is all based on the performance of the investee company, and of course also depended on the board of directors, the way how they declare the dividends. Now, in this case, the advance tax liability will only arise when the board of directors declare the dividends and the taxpayer has certainty in terms of receiving this dividend. So the interest burden could be reduced in terms of dividend taxes. Uh, More importantly, I think again looking at pressing on the ease of doing business, most of the returns, wherever taxes has been deducted, especially the salaries, the interest parts would come pre-filled, and this is what happens also in other countries, other European countries. There is a pre-filled return, and then there is a possibility of either changing this pre-filled return or maybe just signing and filing it. So for simple and thorough taxpayers, I think this will act as uh, this will act as ease of compliance and ease of doing business. Uh, Certain tax holidays for startups and also capital gains exemptions, an year has been expanded. So we can look at such exemptions till 31st March 2022 now. Certain affordable housing, there has been additional interest deduction, which was given under Section 80 EEA of 1.5 lakhs. And such deductions will now be extended to loans taken till 31st March 2022. So I think, Tarun, if you are buying home for the first time, I think you can take benefit of such affordable housing interest deductions. Possibly, if you look at it first time, there are certain criteria to fall in, so you can refer Section 80 EEA there. I think this is about it, which was there spoken in the uh, budget speech by Honorable Finance Minister. I will get back to you after doing a detailed analysis of various provisions of Income Tax Act, and I would like to take it one by one for everyone's benefit. So with this, I would like to close this live session. Uh, Thank you. Yeah, I think from my point of view, it's a really good growth-based budget, and we all look forward for a very I would say, great execution of this budget for financial year 21-22. Thank you.